Hi, welcome back to another Crypto Dave video. So today I'm going to be talking about cryptocurrencies and tax within the UK. So if you're not in the UK, this probably won't relate directly to you. There may be some takeaways that are relevant to your particular country, but this is going to be specifically talking about tax in the UK. So first of all, obviously this is not financial advice. I'm not an accountant. I'm not a tax advisor or anything like that in the UK. This is purely from my research, me speaking to my accountant, various other kind of people involved within accountancy and kind of tax advising in cryptocurrencies in the UK, as well as kind of research I've done online, you know, within some of the resources that I'll be talking about in a minute. So this is not financial advice. Do not get investigated by HMRC and then said, well, you know, a guy on YouTube said I should do it like that. This is purely my interpretation of the rules at the moment. I'll be really interested in any kind of comments you have. Please pop them in the comment section below and we can kind of start maybe a discussion about it. But what I want to do is just talk very generally about cryptocurrencies and the tax implications of cryptocurrencies in the UK. And then what I will do is run through these 5 examples, which I think are probably going to be more relevant to individuals. So, you know, it might be somebody who's bought and held a bit of Bitcoin. It might be somebody who's done some mining, or somebody who's trading kind of altcoins or something like that. But we can step through these specific examples and then, you know, kind of talk about the tax implications of those individual cases. So let's start by just talking generally about cryptocurrencies. So the general position of the UK government is that cryptocurrencies are classed as assets in the UK and therefore are subject to capital gains tax. And that can be capital gains profits or losses, depending on obviously whether you've made profits or losses on your investments. But they're not in large subject to income tax. Now, there are some specific cases where they are. If you're mining, potentially kind of staking, also if you're day trading, if you're trading as a kind of profession, then they are subject to income tax rather than capital gains. But in the vast majority of cases where somebody's just bought, say, Bitcoin and has held it and then kind of chosen to sell it, that is the capital gains that will apply. So let's jump quickly into some just quick resources which might be useful for you to have a look at before you start trying to kind of process all your own kind of cryptocurrency stuff. And I'll link these in the description below. But one of the best resources I found is the Bitcoin UK Reddit. And although it's Bitcoin UK, it's more of a general cryptocurrencies UK subreddit. And a lot of the questions, as you can see here, a lot of the kind of topics here are relating to tax. So there's trading and tax here. We've got mining as a business, capital gains and corporation tax, capital gains tax on Bitcoin, what documents to provide, another Bitcoin and tax threat. And the nice thing is there are some registered tax advisors here who have been giving their input into various kind of people's individual kind of questions. And what I've done is kind of like look at, you know, the consensus of information basically coming back from people. So some of it's from tax advisors, some of it's from people who have spoken to HMRC directly. I've also spoken to my own accountants. And this is kind of my sort of take of cryptocurrencies really and their tax implications in the UK. So this is a really good starting point. There's also this page. I'll link, as I said, all of these below. But this was actually written by someone within the Bitcoin UK subreddit, but it's basically a guide to it's a cryptocurrency UK tax treatments guide, and this goes into excuse me, goes into lots of detail about specific kind of bits and pieces. So it's disposals of crypto, record keeping, highly speculative games, frequent trading, various other bits and pieces, which is really useful. So if you are interested in cryptocurrencies and their tax implications, do have a read of this. It's very interesting. I'll also link this below. So this is the capital gains tax document, the most recent one on the HMRC site, or this is actually gov.uk, but this is from HMRC. And then lastly, a website which I found pretty useful myself, which is bitcoin.tax. Now, this is not a specific UK resource, but it's a really nice way of putting your trading history, staking and mining kind of history, and kind of putting it all together in one place, so you can get the figures that you need out of it. But I'll talk about this a little bit later. But let's jump back to our first example. So this is the first example I want to talk about. So this is where you've bought cryptocurrencies directly and either held or sold them. So in this example, for example, last year, let's say, for example, this time last year, you bought £1,000 worth of Bitcoin on Coinbase, you've done nothing with it. It's sat there in your Coinbase account, and in that case, you've bought something, you haven't kind of like released it, you're still holding it. There are no tax implications at the moment. So you've bought £1,000 worth of Bitcoin. Say Bitcoin was worth £1,000 at the time. So you bought one Bitcoin. Bitcoin is now worth, say, £6,000. You're holding it, so there's no tax implications. If you choose now to sell it before the end of the tax year, then you will be subject to capital gains tax on the profits from that. So if you bought for £1,000, you're selling for £6,000, you will be subject to capital gains tax on the £5,000 profit that you made. Now, the good news is in the UK this year, the capital gains tax allowance is 11,300. So within this example, you wouldn't have any tax to pay. You wouldn't have to declare or anything like that. You're well within the 11,300 tax band, so no tax will apply. Obviously, if you bought, say, £10,000 worth of Bitcoin and they're now worth £60,000, you'll be subject to capital gains tax then on £50,000 worth. You can then take 11,300 off that, and then you will be subject to capital gains tax at the remaining the remaining amount. So 50,000 50,000 minus your 11,300, and the rate at which you will be taxed will either be 10 or 20% depending on the income tax bracket rather that you fall into. So that's probably the simplest and easiest example that we're going to get to. So the second example is where you've bought through another coin and held and sold again. So this is for altcoins largely. So if you're in the UK, you can buy Bitcoin directly. You can buy through Coinbase or local Bitcoin, something like that. You also buy Ethereum, Litecoin, some of the main coins directly. Now, if you wanted to buy something different, say you wanted to buy Dash, for example, what you would have had to do is buy a Bitcoin or Ethereum normally, and then send that to an exchange and exchange that for your Dash. Now, from most of the conversations I've had, if you're doing it immediately, you would just put your initial kind of cost down. So say you wanted to buy £1,000 worth of Dash. So what you actually do is buy £1,000 worth of Bitcoin. You send the Bitcoin immediately to an exchange and immediately exchange that for Dash. Now, I think in most of the examples and most of the people I've talked to have said that's perfectly fine because you've done it kind of immediately and it's the only way you can kind of buy it. You don't have to put an additional kind of transactions of that you've bought Bitcoin for £1,000 of Bitcoin, then you've sold Bitcoin for X amount, then you've bought Dash, etc., etc. So you can just put down you've paid £1,000, you've bought X amount of Dash, and then when you come to sell that, obviously you sell your Dash, you will probably then sell your Dash back into Bitcoin, and then sell that Bitcoin for pounds, for example. So say in this example, we bought £1,000 of Bitcoin, we converted that to Dash. Dash has gone up now to £10,000 worth. So we sell that £10,000 worth back, or we convert that £10,000 worth of Dash back into Bitcoin, sell the Bitcoin for pounds sterling, and we get £10,000 back. Now, obviously, we've made £9,000 profit. We're subject to capital gains tax on that, but it's again within our threshold, so we won't actually have to pay in this particular example. So that's, I think, the best way to deal with things you've bought immediately. Let's look at the next example. So this has become a little bit more complicated. So we've now bought something and exchanged in the future to other coins. So in this situation, this is where record keeping becomes really important. And the good news is that most of the large exchanges out there, so Poloniex, Bittrex, Binance, all of these kind of large exchanges, you can download your trading history. And that's also where a site like bitcoin.tax comes into its own, because you can basically import those CSV files. So you basically download a CSV file of your entire transaction history. You can import that into something called into a site like bitcoin.tax, and it will work out what you've sold, the prices when you've sold, you know, and potentially any kind of like gains and losses you've made. So that's a really important, you know, reason why you should be kind of keeping records of all these things. But in this example, say we bought like the first example, £1,000 of worth of Bitcoin when Bitcoin was £1,000. So we bought a Bitcoin, and then at some point in the future, Bitcoin might have gone up to, you know, 3,000, 4,000, and then we thought, oh, what I'd like to do is get involved in Neo, for example. So we've then sold our Bitcoin at some point in the future, and we've bought Neo. Now, in this situation, when you sell your Bitcoin for Neo, a chargeable event has happened. So you bought when Bitcoin was worth £1,000, it's now worth £3,000. So you've made a profit. And even though you're transferring that into another coin, most people seem to suggest that this is a chargeable event. Now, I know some accountants that have spoken directly to HMRC, and I know some people that have spoken to HMRC directly, and HMRC have said if you're doing an exchange from one cryptocurrency to another, then it's a like-for-like exchange, and therefore it's not a chargeable event. And this is the problem, and this is a problem with any kind of like new industry. There isn't a huge amount of information out there. The bulk of information, or the bulk of people are saying any swap from one cryptocurrency to another is a chargeable event. But then I know people who've contacted HMRC directly, or their accountants have, and they've said no, it's a like for like, Bitcoin for Ethereum or Ethereum for Neo, or whatever. I think in this situation, if you have an accountant or a tax advisor that has advised you to go down a particular route, that's fine. But make sure you keep all your kind of records, because what you don't want is in the future then HMRC coming back and saying, oh, well, we don't think you should have done it that way. We think you should have done it another way. Now, obviously, if you've had a professional advisor who's advised you to do it one way, then that does give you some, some kind of comeback. We can say, well, I went to all reasonable precautions to try and do it kind of correctly. I went to my accountant and they suggested I do it like this. But as long as you've got a complete record, then you will be able to kind of go back and, if you do have additional tax to pay or anything like that, you'll be able to kind of work that out. So in this example, we bought at Bitcoin. So we bought Bitcoin at 1,000. We sold it when it was worth 3,000. Then we bought into Neo. Now, what you would normally do is say, well, I made £2,000, which will be on my capital gains tax, or which will come out of my capital gains threshold this year. And then say the Neo, if you're still holding the Neo, that's then fine. And then if you've sold that Neo, say that Neo has then gone from being worth £3,000 to being worth £30,000, and Neo had a massive rise last year, for example, then you will have, when you sell that, another capital gain tax, another chargeable event. So in that case, you will have a £2,000 gain when you swapped your Bitcoin for Neo, and then when you actually sell your Neo, you might have bought Neo at a certain amount, say 3,000, that's gone to 30,000, so you've got £27,000 gain on that as well. So you have to add those together, so you'll have £29,000 gain, and you will obviously be able to knock off your 11,300 allowance from that. But obviously, you can see how easy it becomes to become very, very complicated. So if you are trading altcoins, if you're buying, buying and selling stuff regularly, and I know a lot of people who would wait for kind of a bit of a pump in a particular coin and say, Dash goes up 15% today, so they sell a load of Dash for Bitcoin, then it dips back down in a couple of days, and then they buy back to gain a little bit more. And you can see how quickly you can suddenly end up with a huge number of kind of trades without really doing a huge amount, and also end up with a massive kind of capital gains tax bill without actually realizing any of that money for fiat. But that's a third example. Now, the fourth example is a slightly interesting one. So if you mine crypto, mining is considered a business activity, and as such is subject to income tax, or if it's a limited company, obviously corporation tax. Now, if you are mining cryptocurrencies, you are expected to register that. So you'd either register as a sole trader or within a limited kind of company, and all those kind of profits will be subject to income tax or corporation tax. So I think probably the easiest way to do this is on, say, for example, you're mining Bitcoin. So on a daily basis, you would, or whenever you're withdrawing the money from the pool into your kind of local wallet, is that you make a note of that and the date. And then what you can do is you can work out the cost, or the acquisition kind of cost in pounds sterling. So if you're mining, a fraction, say 1/100th of a Bitcoin, Bitcoin's worth £1,000, and you've mined £10 worth of Bitcoin, you put that down. Now, as Bitcoin price goes up, a month later, you might be mining £20 worth of Bitcoin a day. So do it on a daily basis. There are no clear guidelines where you should be getting your figures for Bitcoin price from. I have been using CoinMarketCap, so I've been using a close price from CoinMarketCap for all the different cryptocurrencies I'm mining, and I have a spreadsheet. Basically, I can import from the wallet whenever I've received mined coins and the date, and then I can work out what the amount of money in pound sterling I've actually received on that particular day, and then you can just sum those up at the end of the year, and that will be your income tax that you due to pay tax on. So that's mining cryptos. Staking cryptos is a slightly different one. So if we jump over to this site here, so if we scroll down just quickly, so we've got mining coins and stakings. Again, it's just saying what I'm saying about mining is likely to be treated as income tax. But then if we look at staking coins, now this is where maybe I wouldn't necessarily agree with this. I've spoken to a couple of accounts who have suggested that if you're running masternodes or staking, it's more likely to be considered the same as mining coins. But there is an argument that staking coins is more like interest, and in which case, you know, your staked kind of coins, or the amount you've staked from your coins, is subject to savings income rather than income tax, sort of normal income tax. Now, there is a £1,000 kind of threshold for basic rate taxpayers, 500 for higher rate taxpayers, where interest that you've received is tax free. Now, this, you know, will no doubt be clarified at some point in the future. At the moment, I think it would be reasonable to make the argument on either side. If you're mining coins, maybe you're kind of saying, well, I'm mining and staking, so it's easier to put it all down as kind of like mined/staked income. If you just bought some coins purely to stake, you never kind of mined or anything, you know, I think it's perfectly reasonable to say it should be classed as savings income. Again, this will no doubt be tested in the courts at some point if, you know, the amounts are very large. But I think as long as you're consistent in what you do, you shouldn't have a big problem with that. But anyway, that's mining and staking. The last example is day trading. So if you are trading as a kind of livelihood, if you don't have another job, if all you're doing is trading kind of cryptocurrencies, it's almost certainly liable to be treated as income tax rather than capital gains tax. And you will be obviously required to be kind of, you know, registered as a kind of business that you're trading. Now, there is no case law specifically for cryptocurrencies because it's such a new kind of a new area for HMRC. But there has been kind of case law within stocks and shares. So there's a really good bit here, if I can just find it, frequent trading here. So there has been various kind of case law. So there were a couple of instances here. One was quite clearly the guy wasn't trading, he was just sort of maintaining his portfolio. And there was another one that was sort of more borderline. So he'd this particular guy made 200, 300 trades in a year, so it was a mixture of short and long-term holdings. He spent a couple of hours a day doing this, and he used online brokers and did some bits and pieces himself. He was only trading for himself. He didn't take any profits from other people, from clients, anything like that. And it was decided, this particular bit of case law, that he was actively managing his portfolio rather than trading. And it was quite an interesting kind of case because I think a lot of people within cryptocurrency will probably fall within this kind of bracket. If you've got another job, if you're not trading money for other people or anything like that, I think it's perfectly reasonable that you might be doing, you know, a sizable number of trades because the market moves so quickly. And if you're just spending a few hours a week kind of managing your kind of portfolio and trading between kind of altcoins, I think, again, this will be tested no doubt in the kind of in the courts in the years to come. But I would think at the moment that, you know, it's likely that that would fall within actively managing your crypto portfolio rather than day trading. If you don't have another job and this is your sole source of income, almost certainly it will be classed as trading and subject to income tax. But that's quite an interesting one, and we shall see how this kind of pans out in the future. The other thing that was quite interesting as well, which is this here. So highly speculative games. Now, this is something that HMRC started talking about in their latest update of the capital gains tax manual. And this I've seen from the kind of forums, a lot of people are going to try and go down this route of highly speculative games, which is basically the same kind of gambling kind of income. And I think for the vast majority of people, it won't apply. So if you've bought Bitcoin last year through kind of Coinbase after all the kind of hype, I think the chance of you claiming it's kind of highly speculative is minimal. If, on the other hand, you had been investing 5-10 years ago before there was any real, sort of like build up in price or kind of use cases for kind of Bitcoin. You might have a stronger case, or if you've been investing very early in ICOs when they didn't have a product, pre-sale stuff like that, you might well get away with put it down as a highly speculative gain, and not subject to capital gains tax. Now, what you have to be aware of is that you can't obviously offset losses within highly speculative kind of gains. It's like kind of gambling from that point of view. So if you have bought at a high and then you're having to sell at a kind of loss within the capital gains threshold, you can put that down as a capital loss, and that's not true within highly speculative gains. But I think the vast majority of people, this won't apply. It may apply to some, and I think, again, if the amounts are large enough, this will be contested in the courts at some point in the next few years. But that's just something else to be aware of. And then the last thing I just really wanted to kind of talk on briefly is keeping records. So as I mentioned before, one of the nice things about the vast majority of exchanges is that you can download your trade history. And I think no matter which of these particular kind of examples you fall into, or whether it's a mixture or outside of these, you really need to try and keep hold of as much of your kind of information as kind of possible. Try and keep a backup of all your trade histories from exchanges. As an example, back in sort of 2013, I was mining Litecoin, and then I exchanged some for Dash at some point. Now, I used an exchange, I think it was MintPal, which is no longer in business. And the issue with that is that, I managed to kind of track down via the kind of blockchain. So I actually had the wallets, and I could see when it had gone from one wallet and then what had gone back into another one. But this is a bit of an issue. Download your data, keep a backup of it, because obviously I don't know whether you could actually get your trade history at the kind of time, but the business has now gone out, or the exchange in question has gone out of business, and there's no easy way therefore to get that information kind of back. But as I said, all the large exchanges, so your Bitrexes and Poloniex and Binance, and that allow you to download all your trade history. The other thing you can do, obviously, if you're using core wallets for anything, is that you can grab a transaction list for that. So this is where I've been using this website, bitcoin.tax. Now, if you only have a few transactions, it's free to sign up, and you can import from an exchange or from a wallet. If you have more, so I had several thousand, because I had lots of different kind of wallets, different exchanges and stuff like that. But basically, you can import the CSV files from all these different exchanges. You can also import mining income directly from CSV files or from addresses. It's got lots and lots of kind of functionality. If you require more than a few hundred transactions, to be tracked, you will need to pay for an upgraded version. So I think there's 3 or 4 different kind of levels of kind of service, which allow you to have different numbers of transactions, import different numbers of transactions. But it's if you're interested, you can sign up, as I said, for free and take a look and see how it works. As I said, I have been using it. The link below is an affiliate link, just to be completely transparent. I don't know, what exactly I will get if anybody signed up. But if you are interested, it's a nice site to allow you to kind of basically import your kind of mining, trading revenue, and then it will work out basically capital gains and losses and all that kind of stuff for you. So that's quite a useful site as well. Again, I'll pop all these links below. But I think that's it for now. Hopefully that's been somewhat interesting. A lot of people have asked me about cryptocurrencies and tax. As I said before, I'm not a tax advisor. This is just my personal kind of take on how things are kind of working at the moment. I'll be really interested in your opinions. Put anything below where you think I've not been kind of correct, or if you want me to clarify anything, and I will try and do that. But anyway, I hope that's been interesting. Give me a thumbs up if it has, and hopefully I will see you on the next video. Have a great day. Bye bye.